Hey, good morning, small business owners. Welcome to Monday Morning Metrics. My name is Rebecca Berneck, and just about every Monday at around 10:30 Central Time, I jump on Facebook Live and I talk about small business finance, small business operations, metrics, how to run your business. I pose a question typically, and we talk about it. So welcome. I'm glad that you're here for Monday Morning Metrics, starting your week out right, talking about numbers, which I always love to do. And today we're going to focus on, are my projects profitable? So this is a question that a lot of my clients and, well, if I'm talking about business with friends and family that we talk about, is how do you tell if your project is profitable or not? Well, the easy question to that is there is a great way to print out a profit and loss statement. And you can run your profit and loss statement by client or by client job. Easy, right? So you go in, you run your P&L, you say, I want to see it by client, you print it out. Well, that's how you generate the report. This is definitely one of those instances where it's data in is data out, because you have to make sure that you are booking things appropriately in order for that report to be accurate. So I'm going to talk a little bit about that profit and loss, one section at a time. We're going to talk revenue, cost of goods, expenses, and to make sure that you're doing your bookkeeping and accounting correctly so that report actually gives you information that you can use. Okay, so we're going to start with the revenue side. So if you are generating your revenue out of QuickBooks, then that's a piece of cake, because already all of that revenue is assigned to either a client name or a client project. So that is super easy. However, if you're generating your invoices from an external or a third-party app, you need to be able to run reports from that third-party app and do what is called an adjusting journal entry to make sure that that revenue that's coming in is assigned to your project. So for example, there are a couple of invoicing applications out there. Like, let's say it's Harvest, and I'm going to talk about Harvest a little bit later as well. But say you run your invoices through Harvest. Well, on the bookkeeping side, when you're doing your books, you might say, boom, you have $10,000 in revenue. Well, revenue is revenue. And if you run just a regular P&L, yeah, that's great. It's just revenue. But if you really want to know if your projects are profitable, you need to reassign that revenue to the projects that the revenue came in from. So for example, if $10,000 come in, you go look at your third-party app and say, hey, of that $10,000, I need to do an adjusting journal entry to classify that $10,000 to $2,000 for client A, $2,000 for client B, $3,000 for client C, and the remainder to client D. That way, when you run your P&L, your revenue side will be associated by client or by project. Now, if you are running your invoices very manually, like in Word, you may want to consider redoing your invoicing process, because that's really hard to be able to say, hey, how much of this money is per client, because it's a very manual process. And you can redo your invoicing process to either run your invoices through QuickBooks or run them through an application where you can run reports based on that. And that's important, because I'm also going to talk about that same strategy in terms of classifying expenses just like that. So the next is expenses. Now, this is whether or not, and chances are this is all about your cost of goods, because your cost of goods, if you recall from previous Monday Morning Metrics, is the money that you have to spend in order to bring in your revenue. Those are the expenses that are directly associated to a client or a project. So if you buy okay, what can I say? If you're traveling and you have a taxi receipt and that is associated to the client that you're going to, when you need to make sure that this is a part of your ongoing operation. So when you book that receipt, that $10 taxi from the airport to your client, you want to make sure at that time you say, and this is for client A. So when you run your profit and loss, that expense shows up and you can tell that, okay, A, I already know that my expenses are in there, or my revenue is in there. Next, I want to do my directly associated expenses. So this is a piece of operations in your ongoing bookkeeping that you really want to be booking your expenses at the time that you incur them to the actual client or project that they are associated with. So that is something that you want to get used to doing daily as you're operating. Boom, here's a receipt, book it appropriately, book it appropriately. So then there's no going back and having to catch up on anything. So now we've got your revenue and we have the expenses that you incur. So the next thing I want to talk about, and this one's like a thing. Service-based businesses. We're going to talk about direct labor, because chances are, if you take a look at your profit and loss statement, you're going to have a line item called salaries. And whether you have 1 employee, 2 employees, 10 or more, that salary just says, let's say $10,000. I spent $10,000 this month on salary. But if you really want to know if you're a service business and you really want to know if that project is profitable, you want to know how much time that your employees spent on each project. So what does that mean? Time tracking. I know it's kind of hard. A lot of people don't like it. You're too busy doing what you're doing to stop and track your time. But if you really, truly want to know whether your projects are profitable from a service-based business perspective, you need to track your time. So now I'm going to go back and talk about Harvest again. Office Heads uses Harvest. There are other third-party applications out there for time tracking. I know one, again, is also T-Sheets. Depending on what your needs are and the reporting ability, pick your third-party app that works for your operations. I'm going to talk about Harvest. So all of my bookkeepers, accountants, hey, we all track our time, and we track it against which client, which project, and what we're doing internally. Because I want to take a look at that data and find out not only are my projects profitable, but what are they doing internally, and do they have what they need? Are they spending enough time on professional development? All that kind of stuff is really good. PTO, tracking all of that. So we all do it by tracking time. Now, this is really important too, that the owner of the company needs to track time as well. So a lot of times I will speak to owners and say, hey, my employees are really good at it. I don't have time. I'm running around. I don't want to track my time. Well, if you truly want to know whether your projects are profitable and you're spending time on those projects, you should be tracking your time. So what's going to happen, it's the same philosophy of we did with revenue. If you're using a third-party app that can track all of your revenue, you run a report, and then you do an adjusting journal entry with your revenue to make sure it's assigned to each of your projects and your clients. Same thing with salary. So I'll give you a little hint of what Office Heads does. At the end of every month, I export all of the line item by line item hours that everybody spent on everybody's project. And then I create a percentage of time per each of the projects. And then I multiply that percentage by the revenue, I multiply that percentage by the salary that I paid to all of my direct reports. That gives me, so I'm just basically allocating the salary to each of the projects. It's an adjusting journal entry to take the $10,000, like before, the $10,000 in revenue. Now it's $10,000 in salary. It's on the expense side, and I'm divvying it up to the time that was actually spent for each of my clients. Okay, so now you have all the revenue that is assigned to each of your projects and or clients. You have all of your direct expenses, which are the expenses that you're incurring to actually make that happen. And then we're looking at your direct reports and how much you paid them and how much of each of those dollars are associated with each client. Now, once you've done all of that and you go to your profit and loss statement, and you go, yep, I want to see this by client, you will see an effective and efficient report that tells you whether your projects are profitable. So let's stop for a second and say, why is this important? Well, you can use this information to see whether or not your employees are being efficient as they deliver. You can use this information to make sure that you're bidding your projects appropriately. You might be losing on all of your projects, so maybe you need to say, instead of taking 10 hours, this probably takes about 15 so that you can create that profit. Also, take a moment to say, how profitable do you want your projects to be? So if you want your projects to be 50% profitable, build that in. Look at your history and say, okay, if I want my future projects to be 50% profitable, how much do I need to charge? How much time do my people need to spend? Then you can watch and manage and maintain your company based on that information. So super important to know whether your projects are profitable, and that's how you report against it. So there you go. There's another Monday morning metric. Thank you for joining me. I appreciate you being here at all times. If you comment below and let me know what your favorite metric is. Ask questions about small business. I can address it in future Monday morning metrics. I appreciate you being here. Hey, have a great and profitable day.